Welcome to the Mentor Guide to Entrepreneurship. This video deals with finance and the records you need to keep as an entrepreneur. We're going to look at three objectives. What cash will your business have? What profit will the business make? And then finally, what will your investment be worth? Cash, profit, and investment. To do so, we're going to keep three records. We're going to keep a cash record, a profit record, and what we're going to call at this stage our IOUs. The cash record will be all of our cash paid and received. The profit will be our trading results, and the IOUs will give us our current financial position. You'll notice that there's two sections. There's the positive flows into the business, so that's incoming by cash, revenue from profit, and our assets in terms of our IOU balances. And then we have the negative flows, so we're going to look at our outgoings, our costs, and our liabilities. Our cash will give us a final bank figure. Our profit record will give us our profit or loss for the particular trading period, and the IOUs will give us our check of our assets and liabilities, or IOUs, to outsiders. We also want to know how much the investment has grown for the entrepreneur, so we also keep a track of the owner's investment, which, as we'll see later on, will be a check and balance to the outsider's balance and that of the owner. The first thing we're going to do is to invest in the business. In this case, we're going to invest £50. So the bank balance is now £50. At this stage, we haven't started trading, so there's no profit or loss. But we will have an IOU to the bank, or the bank will owe the business £50, which is an asset, and this will be recognised in our list for outsiders. You'll also see that we've got £50 of investment that effectively is owed to the entrepreneur. He's put that money, or he or she has put that money into the business, and that's effectively owed to them should the business stop. Next, we're actually going to start trading, and to begin with, we're going to make some calls to suppliers and customers to see what deals we can do, and as a result of this, we incur some costs which we pay in cash, and we're going to represent those as a negative in these records. So we're going to spend £7 in terms of phone costs. We're going to reflect this in the overheads, because that is a cost. An overhead is something, a cost that doesn't directly affect the sales. So if you sell one more hat, the overheads don't directly change, they're more constant. So we've got phone costs of £7. At this stage, there are no liabilities for the telephone cost because it's been in cash, so that remains unchanged. You'll see that the bank is now £43 as a result of the phone costs, which means our outsider's balance is now £43, and the owner's share of the business is also £43, so it equals the balance for the outsiders. You have to make sure this is always the same figure. The next thing we're going to do is actually to purchase a hat to be able to sell it on, and this was what we're going to call a cost of sale, and the cost of the hat is £7. So at the moment we're making a loss of £10. We haven't sold anything. This £7 isn't shown in the cash statement at the moment because it's actually on credit. We're going to pay the supplier at a later date, and because of this we now need to represent this in our liabilities, or IOUs. We're going to have a creditor figure of £7. You'll notice that the bank figure is still £47, but we now have a creditor figure of 7, and now the total IOUs is £40 for the business. And this is represented by the change in the owner's investment, which is now worth £40. Again, you'll see that it is the same figure. Now we're in a position of actually selling a hat. The first hat has actually been sold to a customer for £20. This is good news. We now have a profit figure of £10 after we deduct our cost of sales, the cost of the hat, and the overheads of £3. We're left with a profit of £10, which is good news. The cash has remained the same because the hat was actually sold on credit, so there isn't a figure as yet for cash from the hat sale, but there will be in the future. And as such, we need to now record this sale of a hat as what we call a debtor, and this will be the £20 that's owed to the business. So the business now has an IOU from the customer of £20, an IOU from the bank 47, and we owe our supplier £7, leaving us with a balance or figure of £60. You'll notice that this is the same figure for our owner's investment, which is made up of the £10 profit and loss, or profit in this case, the £50 original investment to give us £60. We can now record this information in a more formal set of records. We have the same data, but now we have what we call cash flow, what we now call profit and loss, and a balance sheet. You'll notice the same figures are here with our cash, now going to call it net cash flow, our profit, and represented by our net assets and our shareholders' funds. So we've just changed the description of each of those categories. Our entrepreneur now has 3 comprehensive records to keep a control of the business. The result being that the entrepreneur has cash of £47, profit of £10, investment of £60, and 3 financial records that will enable them to keep a control of the business and manage it effectively. Eureka!